Welcome to Investor XP. This is the news show that covers investing for gamers. Our message? We want gamers to become investors and secure their future. We believe that gamers like yourselves have strong, intelligent communities that allow the cultivation of ideas, and that gives you a distinct edge in the stock market. This show, we discuss investment ideas focused around gaming, entertainment, and technology. I'm not a professional analyst, but I am retired under the age of 40 because of investing, and I want to help you build a better financial future. You can track my stock picks from the show on our website, investorxp.com. You can also see exactly what I'm investing in at kidbrokers.com. I'm building my kids' college fund with the very stocks we discuss on this show. It is Tuesday, May 30th, and we got a great show for you today. Here's what we got coming up if you're watching live. We're going to be talking about Nintendo stock. A couple of stories we got for that where we think we have some catalysts for growth. Nutanix, the cloud computing service, we're going to talk about that. We had some viewer questions regarding that. We're going to talk about food stocks for gamers and kind of whittle down our picks as we've been going through the last week of what we're going to invest in. So each of those will have their own video posted today in the recap. Let's go ahead and get started. Talking about Nintendo, they are ramping up production on the Nintendo Switch again. They have done it earlier this year to increase their production so that they can meet demands. It looks like Nintendo is doing this once again to further increase their production, and we think this is very good news for Nintendo stock and some other retailers. Let's go ahead and we'll pull up the story. It's over at Nintendo Today. It's on several Nintendo websites, but we're going to pull up the Nintendo Today article real quick to take a look at it. Increasing their production to 18 million consoles during their first fiscal year, which is big deal. This could be a lot of extra revenue. Certainly, we're bullish on Nintendo stock if this happens. Additional sales. We've been touting Nintendo stock since the show started, basically, and they are up today another 2%. So we'll pull them up. You can see them going on ticker below. We'll also go over to their chart. Nintendo has just been on fire really since Pokemon Go. They've been having a major comeback, decent dividend yield. So really like Nintendo, but the people that we think are also going to benefit from this is GameStop. And their stock took a pounding Friday. It's bounced back a good 1% today. But as you can see, kind of fell off a cliff there on Friday. Starting to make a comeback Tuesday. They need to get back up to that price point. We believe that the sell-off is a little too overdone for GameStop as they're getting down near their price-to-book value, and they have that nice dividend. So I wanted to show real quick while we are bullish on GameStop here. From their last earnings call, I'll pull it up here. Again, they sold 6 pieces of software and accessories with each Switch unit sold. So more Switches out there, they're going to get more of them, and they're going to be able to attach these pieces of software, because what GameStop is doing is they're not even letting the units hit their store. You have to go over to GameStop and basically pre-order the bundles. So they're going to continue to bundle that with the Switch and making a lot more profit off it than just selling the units themselves. I pulled up GameStop. Let me go over to it here. They're already out of their latest bundles that they have, and they don't have anything in stock. They're selling them that quickly. Now, you can guarantee yourself getting a Switch by going over to GameStop and getting these bundles when they post them. Look for them at Twitter. But they're already sold out. I was hoping to kind of show you what bundle. You get some good games with them, but that's their way of selling. And I think with more Switches out there in the wild, you're going to see GameStop stock pop up a little bit because of that. So, great news for Nintendo wrapping up production. Let us know what you think of Nintendo stock, GameStop stock, or any of retailers. How you think they'll benefit from this increased production of the Nintendo Switch. Uh, Still very bullish on Nintendo and GameStop for that matter. So let's move on here to our next article. We're going to talk a little bit about some cloud computing. We had a viewer question come up on Nutanix. It's a cloud computing server company out there. Wanted to know our opinion on it and what we thought. So we're going to take a look at that today. This is certainly an interesting stock looking at it. Everyone is there's the land grab, mass rush for any kind of cloud computing, especially with virtual servers and things like that. Interesting company. Let me go ahead and pull up their stock first before we show you. Let's just look at some of the basics of their stock. They had an IPO 2016, I believe, was their IPO. They're down 7% today. Some people took some profit. They had just popped up recently. You can see they had a big pop in their stock, and it looks like some people are taking some profits off it. So today they're down 7%. So certainly, if you liked them at 20, you should be licking your chops today at 18 to get in. Now, one of the things with them, very new company, $2 billion market cap, but we are dividend investors, so we're not investing in them. For a conservative investor like myself, I don't like the no dividend, but they don't have debt is one of the good things. They've been losing money. Now, the reason they popped up the last quarter was because they kind of shored up their losses. They didn't lose as much, and they're starting to turn things around, which is a good thing for the company. Here's what's going to come into play is their cash, and I just messed that up. If I can show their cash here. $350 million in cash. Doesn't look like they have debt according to Yahoo, and $10 million free cash flow. So are they going to? The question comes down to: are they going to blow through the $300 million and have to offer more stock, which you'll get a better price at it, or if they're kind of cutting their losses, and that's why they just spiked up recently? Will they be able to weather through with that amount of money and grow off of that? Could be. I can see where people would want to play. The big company in this space is Amazon. Amazon's cloud computing platform. From everything that I've read and talked with people, they have got kind of the top cloud computing service right now, and they're dominating the space. So what they do, and I'll put links to the website and everything over there, is their enterprise cloud solution and virtual servers. So the question becomes, are they going to take a little chunk of that market? And they wouldn't need much for them to become a very profitable company that could grow. Will they notch out their own little group of people to pay for the services? And let me find. Here we go. Here's the people that use them. A lot of sites put up, who uses them, and really not a ton of big names. You got Toyota on there, some car companies, Sprint, AT&T. You got to take it with a grain of salt because you never know what degree they use these companies. A one-off application type of thing. But there are some big name people that they work with here. So the question again is, can they notch out with these people, more customers, and build their business up with that? That could be a lot of upside for an investor, certainly. This is a little bit too much of a long shot for me. I like a lot safer of a play. If I was speculating on who can get a little share of the cloud computing space, I would probably go, as crazy as it sounds, I would go with an IBM. They pay 4% dividend, very sound company. They've been getting beat up lately, really beat up. Watson is kind of, people make fun of Watson, even though it's a terrific technology. Um, so they're a little beaten down, and people are waiting for them to make transition. I think they'll get a part of the space pretty easily, and then Microsoft would be the other one. So IBM pays 4% dividend. Microsoft is 2 or 3%. Yeah, 2% dividend is what Microsoft is playing. They're certainly not gonna go away quietly when it comes to virtual servers, cloud computing, that type of thing. So the safer bet, I would say, would be IBM, Microsoft. You're backed up a little bit with the dividend that they pay. Um, More seasoned companies. Now, the upside for Nutanix is it could be extremely large. Again, they're a tiny company, um, could have some explosive growth. Uh, it's can they weather and build their company over time? Let's see, their IPO was October 3rd, 2016, around there. You see, they've sunk since their initial IPO, which some companies they do that. Um, could they bounce back? Long shot. I don't know. I'd take the safe play. I'd take the safe play, um, but they could get their niche little market and be a very profitable company. So, let me know what you think. Would you invest in Nutanix? Uh, you think I'm being too conservative with Microsoft and IBM on this play? Really like to know what you think. You can put it in the comments in the video below. And we will move on to our next story, talking about fast food. So, all last week we did articles of where we're looking at possible fast food companies for gamers to invest in. And we had some very interesting picks there that we were taking a look at. And today we're going to kind of narrow it down even further. I don't know if I've got my solid picks yet. I may add a couple of them to what we're looking at. So, of all the companies we talked about last week, the most interesting, I narrowed it down to two of them. The first being McDonald's. McDonald's, with their technology that they're going to be implementing to the store and their rewards program that they're coming up with. A lot of people think this is going to go to 170. We like it because it's a large, solid company with a good dividend yield, and we think they'll be able to leverage their rewards program and technology to boost them. McDonald's is a staple for people to eat at. I think certainly with their new offerings that they have, the all-day breakfast was great idea, and they're kind of revamping their food, healthier, a little more high-end, non-pink slime stuff. So we like them. We think there's some more growth potential for McDonald's. Very safe play. The other one that we're looking at is Texas Roadhouse, and That is a little more upscale restaurant compared to a McDonald's, and don't know how many gamers are actually going to Texas Roadhouse, but Texas Roadhouse is constantly packed, and you never walk away with a bad meal as far as I've heard from anyone. Certainly when I've gone there, it's never happened. Uh, they are a little more opportunity for growth domestically. Certainly, they can open up a lot more restaurants as they're not as saturated as a McDonald's is, and they pay a decent little dividend, 1.7%. Um, so we liked both of those. I'm going to add those both to our spec list for stocks that we're going to take a look at as potential buys and watch them a little bit closer in the future. Now, let me pull up what we're looking at right now. We track our viewer picks, our spec picks, all of that. So on our spec list, we got Nokia, Cisco, EA, Nvidia, Tencent. We really like Tencent. That was a viewer pick. I've since stolen it uh, for for us to watch to buy. So we'll put them on here as well. McDonald's and Texas Roadhouse, and we'll see where they go. In June, we'll be buying up some more stock as we buy monthly here. Um, could be a McDonald's. It'll be one on our speculation list. I think. I don't plan on buying more on what we've got in our portfolio just yet, unless I really see a nice opportunity. So, McDonald's and Texas Roadhouse is who we're looking at right now, and I think either one is a pretty good buy with some upside to it. So let us know what you think of those picks to add as possible investments in the near future for us to add to our kids' portfolio. Let me know in the comments below. And we'll move on to our final little article for today. Nintendo has a lot of catalysts popping up in the news lately for reasons to invest, and one of the big ones is Nintendo Super Mario World, a Nintendo theme park that's popping up here. This isn't exactly new news, but it's popping up in the news kind of to remind folks, and we think this is a great catalyst for the stock to go even higher. We're going to pull up the news article. We got it over at Nintendo Life. They're talking about, they looked at the patent, and we'll put a link to the article in the description below. They looked at the patent over there, and they talk about a section for basically like kart racing, Mario Kart, in the amusement park, which is kind of a no-brainer. But 2020 is when it's opening in Japan, and then later in the U.S. We think this is going to be huge, them getting into these amusement parks. Big resurgence in Nintendo. Keep their IPs out there. So this is one area where we think it's a big catalyst for the stock. And again, it's not new news, but it's surfacing again. And I don't think a lot of people price that in as much as it should be with the stock coming out. Another interesting little piece of news that's out there. For those who remember River City Ransom, Natsume is talking about a release of what they're calling River City Knights of Justice. It's a Western release of a 3DS game. And River City Ransom was one of the better Nintendo beat 'em up games that used RPG elements. Pull up some pictures of it here. Do you guys remember this game? This game was a blast. It's a little bit like Double Dragon with some RPG elements. You could go to the shopping centers, upgrade your punches, your kicks, get some sushi to regain your health and things like that. Absolutely terrific game, River City Ransom, and I think you're going to see some resurgence of 8-bit classics like this. The Nintendo Switch and 3DS are perfect platforms for it. So that was just one game I grabbed out of there of many work that are coming from Square and other people that are kind of a throwback to the Nintendo style that a lot of people around my age, growing up with the Nintendo. So I think those are going to be extra drivers that are going to be out there to boost the Nintendo stock. So big catalyst is the amusement parks. Not a lot of people are talking about them. It certainly is old news, and they're going to be coming. So push the stock, and we're going to be looking at lots and lots of games. There's too many of them. I'd have to do a bunch of individual articles of things like this newer River City Ransom type game, and older RPG throwbacks that are coming out. Square just announced a new game that's going to be coming out. So I think nostalgia is going to also help boost the Nintendo Switch sales, which again is going to be good for Nintendo and retailers. Let me know what you think. Are you hyped about the Super Nintendo World theme park? And some of these more nostalgic games coming out for the Nintendo Switch. Let me know in the comments below your thoughts on it. And that's it for today. Thank you for watching. Contact the show. You can tweet us, email us, watch us live. Info is on the screen behind me. Thank you so much for watching. Subscribe if you haven't already so you get the latest investing news for gamers. Really appreciate all the subscriptions and the growth of the channel. We really want to continue to grow a community where people who normally wouldn't invest, they get some gaming news and they start learning about investing. Especially you seasoned investors, love the posts, the comments on the videos. Really want to hear your take on some of it, whether your trade, long-term investing, what your strategies are. I really want to see new investors start to see what some of the things that you guys do. Really appreciate it. So thanks for watching, and we will see you tomorrow.